Yeah, I'm good, brother. Thank you. I'm good. All right, guys. Without further ado, let's start today. First, we go to the 7 hour chart. On the 7 hour, we have this swing low here, the most recent swing low. Looking for this deviation, price rate to minus 3.5. That's a retracement zone. So we expect a retracement between 0 and -1. If we were looking for this in a box, would be something like this blue box. So price almost touched the low of this level that I was expecting the retrace. Also, if we measure the low of this fractal consolidation to the high, we retrace to almost to 0.886. So price retrace right now between 0.705, 0.786 and 0.886. Also, this is a little bit below the 50% of this fractal consolidation, and this was the 0.705 retracement of the hidden range for the weekly purpose, the 2,187 points. So price failed to close above the range high, that's here, and then we expect a retracement at least to 50%. If it closes below the 50%, I'll pay attention to retracement levels 618 or 0.705. Right now, price touched the 0.705. The week trade below this level, but look at the bodies. Now it's above this line. So I'll pay attention initially the quadrants from 0.705, 0.618, and now price is about to start trading from the lower quadrant and the 50% of this small range here. On the 1 hour chart, we have this most recent swing high was the 4 p.m. candle of Thursday, November 13, yesterday. So looking for this candle here, we just trade to 4.5 deviation, a little bit below this 4.5 deviation. But look at the wicks, never close below this level. So we have the 7 a.m. candle, the 8 a.m. They try to trade below this level and they fail. So this is just a manipulation. So for me, this delivery is done on the downside. And now we have the 8 a.m. candle as a new swing low. I can look for this deviation. I'm not saying that we're gonna feel this 4 deviation today, but it's possible. Then that will be a big market maker sell and the buy model. And if you're not getting here by today PM session, probably by on Sunday to Monday, we're gonna hit this level here, 4.5 deviation. Of course, we need to see if the price is gonna close above -1 to confirm this move, or if this will be a manipulation to keep moving lower. On the opening closing range chart, we can see here the price trade on the gap from this opening range and this cluster of opening and closing range. It traded exactly to the lower quadrant of this gap, so the 25% is a failure to close below this level, and now price trading inside this closing range. If close above, I'll pay attention to this one, and if close above this gap here, ES did the same, but ES didn't trade to the gap, trade to this closing range and never close below the 50%. On the regular trading hours chart, price trade between, on this last retrace right now, trade between this new monthly opening gap and this new weekly opening gap here. Again, on this level, we price never trade below 50% of this range. That's the 50%. Actually, it trade between 50% in the lower quadrant, but never close below 50% of this range here. We touch 50% and reject. So for me, that's the weakest to moving lower. So I'll pay attention right now on each of this quadrant, and if close above, moving back to this new week opening gap and this new month opening gap here. On the midnight opening range, we have a very big range today. So big range, 100 points. So bigger than 20 points, I classify as the big. Smaller than 20 points, I classify as is small range. Usually, when we have a big range, we used to see manipulation up to 2.5 deviation, and the delivery used to 4. But when it's like this size, I mean, that's, I would say this too big. I expect maybe 3 to 4 deviation, or sometimes around 3. Thinking about this could be the low, but we need to pay attention after the opening if price is not going to take in this lows, and if not, we most like to see price trading back to the midnight opening range. Here, earlier today, we could see that was a very bearish setup. Midnight opening range, manipulation almost to the half deviation of the range. On this retrace, close below the range low, and on this small retrace back to the range, failed to close 2 times here and here to close above 50% of the range. That's the weakness to moving lower. This candle actually touched the OT, the midnight opening price, and failed, and that price trading lower. On the time-based deviation chart, the regular trading hours range, the range from 9:30 to 4:15. Again, after the range was formed, never closed above the lower quadrant. Actually, these 2 candles right after the range was formed, trading to 29.5%, the first level above the lower quadrant, but failed to stay there. It started closing below the range low, and when price move away from the range on the downside or the upside, I'll pay attention initially the first gray box. If it close below the second gray box here, price initially failed to close below, and these 2 candles close below the second gray box. So I'll pay attention now if the price start closing above this second gray box when this candle rejects right now. If the price fail, we most likely to see a moving to the 30 gray box here, and that should be the biggest move for the price. If start closing above this level, then we most likely to see this other gray box, and if close above the range low at least. The London range, the range from 6 p.m. to 2 a.m. After the range was formed, very similar setup at the midnight open range. After the range was formed, never closed above 50% of the range. That was a rejection here. And on the next retrace, never closed above the lower quadrant. So show some weakness to moving higher. And for this setup here, I pay attention always to the first or the second gray box. Price touched the second one. In rejection, start moving higher. So the same logic here. If hold above this level, I'll pay attention to the this next gray box, and if close above, and moving towards to the range low. But I'll pay attention on each level of the range here: 0.786, 0.5, and 0.23. If close below this level is not usual, we could see price trade to 2 or 2.5 to 786 down here. It's a very big range as well, 186.50 points. The pre-market range, the range from 2 a.m. to 5 a.m. For this setup, I usually to see price moving to or the first level above or below the range, the 0.23, or sometimes to the gray box above and below. Today was even a little bit further. So price rejected the first level below the gray box was the 1.272. And now the New York range, the range from 6 a.m. to 9 a.m. The range was just formed like a few minutes ago. So I pay attention to the level inside this range first. Like right now, price is holding above the lower quadrant. If you keep it like that, is a weakness to moving lower. So after days 1, I pay attention to 50% of the range, and if close above the 75%, if start closing below, I'll pay attention to 11% is the last level below the low, and if closing below or above the range, initially the first gray box, and if close below, the second one. Very big range too as well, 286 points for this range. So price was very volatile today. The time window chart, the range from 9 to 10 p.m. Usually 44 and a half deviation be high and low of the day. Today was very volatile day, so price traded even below the 30 gray box, 6 and 6 and a half. The London range, the range from 2 to 2:15 a.m. After the range was formed, closed below, initially to the manipulation levels between half and 1, retraced to 50% of the range, never close above, so we can still moving higher. And usually we have the first delivery at London, and if close below, sometimes go to 44 and a half. Today, I'm not sure if you're going to trade this low here, because a very big range for London, 97 points. Usually this range is 20, 30 points, so too big a range to trust the price down here. And I'll pay attention to the New York window, 9 to 9:15. I'll pay attention to the manipulation levels, upside on the downside first. Big range to New York too as well, 54 points, so very volatile day. The other way to see the daily deviation, the range from 6:45 to 10:03, usually 44 and a half will be the high and low of the day, but today, again, not a regular day. Price trade below this level, so this could be probably a deviation. I'll put the level later here, but let me see. So 256. You know, a deviation should be down here. This would be around the 6 deviation, but I mean, beyond the levels that I was expecting, but we could see that was a bearish day after the range was formed. Trade to the almost to -2, retrace back to the range, never close above the lower quadrant. So failure to close inside the lower quadrant and then close below the second gray box. We expect price to, 44 and a half and trade even lower. The daily deviation chart after the opening price never closed above the upper quadrant from 0 and 25, rejection here. And usually we're not seeing price trade below the 1 deviation. That will be usually the full range. And today trade to -1.25. If we draw the same level here, we touch the level and fail. And right now price failed to close above -1. But if you pay attention to the quadrants inside this range, we on this retrace never close below the 50%. So this showed that we're supposed to move in higher. And on this last retrace that we initially failed to close above the next range here from 0.75 and 1. On the retrace, he holding above the upper quadrant, so we most like to see price start trading from 1 and 75. So I'll draw the this one. The stop and chart, price swept all the stop and level 3 that we have here for the London session, the Asia, yesterday PM session. And on the upside, didn't take London or Asia high. So maybe this price actually they could trade to take the highs here of London, Asia. The monthly and yearly cycle, this cycle starts on November 7, so it's from November 7 to December 8. After the opening, we trade to fractal 886, failed to close below, so price moving back to the range from half and 618. On this move, we never close above the fractal 076, that's 705 and 076 retracement levels. And today we touched the range low of this level here. We touched 618, not a tick above, not a tick below. Rejection to close below this level. We expect price moving back to at least 50% of this range, and that will be here the fractal 50%, 24,983.50. And if close above, retracement level 0705, 0786. The weekly hidden range after the, I'm going to put 1 hour. After the weekly opening, we trade to the upside onto 50% of 0786 and 886. So that's a deep premium level. Fail to close above the fractal 50% here, and then moving lower to 50% from 886 and 0.97. Actually trade to first level below the fractal 50%, almost the 618. But right now, price start trading from 886 and 0705. Every time price entering in a new range, I expect price moving at least to fractal 50%, first level above or below, and should be this level here. The daily deviation using this same measure. After the daily opening, price never closed above the retracement level, the fractal 0786, touch the 0786 and reject, and then trading lower to, like I said, usually the 0 should be the low of the range, and I like to pay attention always 11% above or below the range, and that was the price of rejection here. These two candles trade to the first level below the range. The wicks trade a little bit lower on the 86 or almost to 0786, but look at the bodies, never close below the 0.997, the first level below the range, and now price back to above the range low, and now straight between 0 and 0.95. Remember I said, every time price break into a new range, we expect price trade at least to fractal 50%, first level above or first level below. In this case, 618 above the fractal 50, rejection here. So now I'll pay attention to the range low will be the 0 or the first level below the low, the 0.997, like happened here again. So the same signature we had on the here, the 0.97 and now 0.97. If fail to close below the range low and went into this level, I expect price right now back into the 50%. If close above, test the range high, and if you close above, the levels inside of this next range here. And finally, on the hidden range, price was moving on the downside, just entering a range high. Like I said, every time we break inside a range, that was the range high. We expect price trade to 50% first level above or below. We touched the 50%, failed to close below. So now expect price moving towards to the range high. But right now, we need to pay attention because this candle rejects on the first level below the high, the 886. If you closing above this level, we most likely to see price testing the range high. And if closing above, we have we need to see this range that we mirror here, 50% of this level. So let's wait the opening 7 minutes to see what happened. Today I'm not gonna trade my account. I already I did a short on the London session after the 215 manipulation. I can show you was after the manipulation, the 255 sorry, after the London opening, I saw the price reject on the 50%, so I took a short, I guess it was around here, and I closed for around this level because I hit my daily profit target. So I'm gonna trade a demo account, a paper trading account, but I use the same risk if I was using my my personal account. So I traded micros the same way, 1 to 4 contracts, and just to show the price action for you guys. And then here, now we have this swing low. So the 844 was the candle that makes this swing low. On the 1 minute, we already feel the 4.5 deviation. So I switch to the 3 minute to see the 3 minute swing low. Right now is this one. So initially I'll pay attention to this one, but because of this huge move, I want to see the Same, the 50-minute deviation. So I want to see the both levels. So this is the 3-minute, and that's the 15. I want to pay attention to the reaction on this, on those levels. Yeah. Yeah, let's see video opening 4 minutes. Right now, the opening in a second. Let's see if we trade to 44.5 deviation or the manipulation down here. Here, price took the 9 to 9.15 high and failed to close above. Right now, that was the high. So we most like to see it trading lower first. And manipulation. Let's pay attention to the retracement levels of the range. 07050 Right now, we hit 4.5 deviation of this single candle measure. And if I stand to the fractal consolidation, right now 0.76. Let's pay attention to this manipulation box, this gray box here. $2.33 of the opening. But since we this candle didn't close, but if this candle closes below the manipulation, we most likely price trade to the second gray box that will be down here. No, it's not working. I tried to enter 2 here, 2 times. There we're about to close above -1, so we're gonna see price trade, for me at least, back to the range high. But I don't know, it wasn't working the demo account here. Yeah, 44.5 deviation. So that would be the trade here. So right now I have a new swing low. Now price trade to the manipulation up here. But let's see if we, on the retrace, we fail to close below the opening range low. Because right now I expect some kind of retracement here. And then I want to see low to next oblique candle high, this for deviation, and later the 3-minute swing. Because like I said, maybe price is gonna trade to make the market maker buy model, and that will be these levels here. And that was really crazy. Like 4 candles, 175 points. And I tried to enter long when it was here, but I tried to use minis because this is a demo account. But if think about, like, I was using like micros because this just didn't work. So let's see this retrace. Because right now on the 3-minute we didn't close above -1, so we don't have the confirmation yet. And here we can see price to release to 50% of 44.5. There'll be this level here. Right now, fail to close above the manipulation on the upside of the 9915. So I expect maybe this retracement using this candle, something inside the opening range. Oh, we gotta leg it. So the orders enter here, the ones that I try to enter down here. So I'll hold because for me, you're gonna trade higher. So I'll take one here, start below the opening. And the other one should be here on the 1.5. Yeah, just not work, but one target here on 1.5, one on one, the other one on 2.33. That's here. And the runner on the 4 deviation. Hold on. That will be here. It's just not working. Has this like, but let me try to do one thing. That will be, and this one be here. And now that we close above a -1, we can retrace it onto 0 and -1 could be something inside the opening range. But and later keep moving higher, at least to 2.33 and 2.5 because that's the first delivery after -1. And if it closes above 2.5, go to 4. Here we can see on the 5-minute chart, we never close below the manipulation levels of the 9 to 915. We trade lower, never close below. This week trade to the downside, never close below. So for me, that was the manipulation. So the minimum move would be, since now we close above the manipulation on the upside, half and 1. The minimum move is 2 and 2.5. That will be here. Closing above 4 and 4.5, and that would be 25,000. And my 4 deviation is 25.0 over here, 25.09. So it's really close to the 4.5 deviation of that level. And also on the 6 to 9, we can see that after the range price trade lower, swept the lows, trade to the first level below the low, 0.11. Never close below, is the weakest moving lower. So I expect now price trade at least to or the range high or the 86 of the range, since you already closed above 50%. And then if so, the first gray box above, and my target for deviation is 25,090. The half deviation here, 25,085. So at least moving to this gray box here. Now look at the indicator show up. So one is 1.5, one on 2.33. That will be here. And the last one, that's for deviation, is this one. Yeah, correct. And well, okay, price already took the second one. This is low, but soon they're gonna show those two micros. So now I have I can. So this was done. So I have the 3-minute swing, these levels here. Now we trade to the minimum delivery for the 99.15 window, 2 and 2.5, this gray box, and that's the 75% of the 6 to 9 AM range. The upper quadrant is an important level. So if you close above this level, we most likely to see moving to the range high. And if fail here, could test the 50% again, but looks like it's gonna push, because for me, like I said before the opening, there's a huge market maker sell and buy model. So probably price is gonna trade to, if you're not taking the London highs, I'll trade at least to this, the Asia high, right? So the full daily range is price trade at least to 0.705, 0.786 of the full range, and that will be really close to my last target. And that's the first gray box of the 6 to 9. Here is in blue, but it's this level here. Now 86. So that's the minimum move that I expect when price get back inside the range. If closing above this level, we most likely to take the range high and start trading above. If you reject here, we most likely price getting back to 50%. And right now, to be safe, stop and break even, zero risk trade. So we take half of the position off, and then we have the last two targets. But when I try to get long, we were around here on this candle below the opening range low, and that would be right now 233 points, and the full trade will be 400 points trade. And one thing that I pay attention right now, remember I said very important level, so I take this one manually, and so I take this one off, so I supposed to have just the runner, because like I said, if we fail in this level, could be a big retracement or on the downside, and also that's 4 deviation of the opening range, so this could be a strong level for price moving lower. So I just took one off here, and now we supposed to have just the runner up here and see what happened. It stop above break even. If stop was out, is still profit to trade, and that's it. Because if we not close below the upper quadrant, there's a strong level to keep pushing higher, or the upper quadrant or the OT. That will be OT will be 24.84. So upper quadrant, the 75%, or the OT. If we retrace it to this level. Yeah, because we have a fair value gap here, and this could be an inverted fair value gap. And if you add the indicator, it will be easy to see. Yeah, there was a inverted fair value. We have two, one here and one here. And let's see the price hold on this FVG or this inverted. And pay attention to this one. And supposed to be half deviation or one to be a manipulation to keep moving higher. We almost touch half, and that's inside the fair value gap. So for me, that was the retracement. Now keep pushing higher and take the highs, the 886 and the previous high. And again, let me put it back. And now if you think about retrace, low, price already moved away, but also low high should be a retrace to 0705 of when price was. Then put on 15 second. So yeah, like low to the high, retrace to 076, and now boom, take the highs. It's on 15 to show the move, because on the 1 minute the candle extended right up. So pretty strong setup when we retrace to a fair value gap, and then reject you right away like this. And now, like I said, take the previous highs. Now it's 2.33 of the standard deviation that I had. So now we just have the runner up here. But since we are already close above, let me take off these other ones, this and this. Since we're already close above 2.5, we go to 44.5 at least. So that's the minimum move that I want to see price doing in the next few minutes. Maybe before 10 a.m. or before 10, the first 10 minutes of the hour. And remember, like we were talking about before the opening, every time we enter in a range, we're going to trade at least to 50% first level above or below. This was the 0.7, but on the retrace, never close below 886, the fractal level that is important inside this range. Reject, break a new level. In this case, break the other one right away. 50% first level above or below. That was here on the retrace, 50%, and now price trading above this 50%. And we're supposed to like to see, since it's above the first level, this 618, 0705 to 0786, and if reject, maybe test the 86 down here. If you close above, test the range high and the other range up here. And on the hidden range, remember I said when we back to the range high, test the range high. This was now the range low and was the range high on the range down here. We're going to trade at least to 50% first level above or below. Now trade around to the 618 above the 50%. That's it. If closed above, retracement levels 0705 or 0786. And if closed above, test the range high. In this case, it would be 50% of the range that I like to see, but I like to see the measures every half, the lower half and the upper half. So right now, we tested the 0705 because this candle is going to close in 6 minutes. So let's see if it closes above this level here. Or if you're going to reject, and then will be, like I said, 50% first level above or below. So take off this one. And now here, what we test on the daily, like I was showing. So that's the weekly. On the daily, we test the high of the range. Break a range, test the high, fail to close above. So fail to close above the range high, retrace at least to 50% of the range. Was this retrace right now? Price hold on the 50%. And if hold here, we most likely see price break the range high, entering in a new range here. So it will be towards this low to 50%. Again, rejection on the range high. Here we can see better. Again on the range high, 0.705 two times, but looks like most I see price breaking this level because it hold on above 50%, and now it's the 950 macro. So let's see. And on the 7 hour, on the big range, when price failed to take the high, a retracement to 0.705 here. And if I use the replay to see the quadrants of this level and put on the 50-minute, sorry, on the 5-minute. The quadrant from 0.705 to 0.776 never close below 50% of this range, and then break the high. And if you pay attention, this is the week that I was looking for the quadrants. We trade below, but look at the bars, never close below this week. So now I'll pay attention to price if close moving above the lower quadrant, the 50% was price right now, and we need to test at least the upper quadrant that's here. If close above the week side, the week range level high. And on the full level that I was looking for the retracing from the fractal consolidation low to the high, on this manipulation of double, we touched the 86, failed to close below. So for me, we're gonna trade at least to 50% of the this range, because if we still moving lower, when it touch 86, we need to retrace back to 50% at least, trade a little bit above this level, and then moving lower to take the lows. And if not, start closing above this level, we're moving to take the highs, because right now we are moving from here to 4.5 deviation up here, because this was 3.5, retracing to 0 and -1. And remember, I draw a box before the opening. We had this range from 0 and -1. And we almost touched the box low. So on the opening, we touched the low of the box and then trading higher. And now that we breaking a new range, 0.705. So we entered in a new range. We expect price trade to at least 50% first level above or below. So we'll be here, here, or here. But on the 1 minute, we can see that the bodies didn't close above the range yet. So just the wicks. So I'll be careful on this level. On the 5, we can see just the wick, but on the 1, body never close above. And here we are rejecting already the 86 de facto level. So rejection here, we're going to back this to this range towards to 50%. When it fails to close inside the range, we trade to where? 50% first level above or below. We trade to first level below and reject here. And here you have a fair value gap here as well. That was a BC. And put this one here. That was a BC, then now becomes a inverted fair value gap, this one here. And if trade below the 50% and close below the first level below, I'll pay attention initially to retracement levels 0705, 0786. In this case, touch the 86 and fail, and looks like it's going to close above this fair value gap. If this happen, there's a retrace to now the next move, break the range above here. Very good. Now we had the 10 a.m. opening a few minutes ago. So that's the 10 a.m. opening. This could be a manipulation for the hour, then later keep moving higher. Let's see the first 10 minutes of the hour as a manipulation or a consolidation. And remember, I was talking about on the 6 to 9 a.m. range, the 86, if the price could touch here and fail moving lower, and this level works as a resistance or support. Now that we close above the range high, they retrace. This level should hold the price, and if so, the next move is start trading above the range high and moving towards to the first gray box here, like this candle, retrace and hold on the 86. So if the price was moving down to this on the downside to the upside, could touch this level, reject and get back to 50% and close above the range high. This level becomes a support for the price and keep moving higher. And now is above the range high again. And remember, what we talk about the mean high opening range before the opening, that this could be the low, and we expect price trade back to mean high opening range. We almost touched the range low, so right now didn't close inside the range. So I'll pay attention to this level, and from the low until the -1, this range here as a retrace. And here, the signature that we talked on before the opening, when price rejects on the 0.97, we can see on the 1 minute. On 0.97, when rejected like this one, is a fade to enter the range, and we most likely price trade to the other side. And again, 0.97 on this next level here. And if fail here, we most likely to stay inside this range. And from here, moving higher. Because here we have another BC, I guess. Let me see. Yeah, we had another BC here. So price rebalanced this level, and if this candle rejected, moving higher. If close below this BC, we're gonna enter this range and maybe come into this other one down here. If not, they'll be moving higher like this one, because on the deviation, when it close above 2.5, we most likely price retrace usually to when we have a big range like this between 1.5 and 2, so 1.5 and 2 be this level, and we touch this level here on this candle and reject right away. Look at the body, never trade inside the -2, and from here we should see the price moving higher. We are in this fractal consolidation, so I like to see the retracement on the both sides, so low to the high and high to the low, and price should trade to 0.705 on the downside and on the upside on the before getting back to the consolidation range. So here moving higher, touch the between 0.705 0.76, reject, moving lower, touch the same level on the downside, 0.705 0.76, and from here reject again. And now entering in a new range, we suppose to see price where 50%, first level above or below. %50 exactly, like this. Low, the high, retrace to 0.786. So let's see if price hold above this level and close above 50% of this dealing range here. And again, when the and again 50%, and on the downside, first level below the 50%. And price is struggling right now on the 6 to 9 AM range high. Like trade to the 0.11, the first level that price did on the downside. But here we reject right away on the 0.911. Here the weak trade above, but the body's never close. And now price struggling to from 886 and the range higher. Now looks like gonna if this candle close above the high, we most likely close above 11 and going to towards to the gray box up here. And this is a very strong zone for the price too, because the 9 to 915 When it closed above 2 and 2.5, we traded to 4 and 4.5 at least. And this could be the end of the move, or make it maybe a bigger retrace, because price is now failing to close inside the 4 deviation. Reject like 1, 2, 3 times on this level. And on the 1 minute, the bodies never close above 0.705. Now here. And if you're looking for a retrace, think that price is moving lower, high to the low, high to the low, retrace to 0.786, and then break the low. So we most likely see a bigger retrace or moving to the downside. So pay attention if it is a manipulation to keep moving higher and move it towards to half or 1 deviation, should be this level here. And that's the upper quadrant of the 6 to 9 AM range here. If fail to close below this level, moving high. If it close below, I'll pay attention to the OTE or the 50%. Right now, price reject 2 times on 50% of this blue box from 0. So from half and -1, 2 times, but the body is above the upper quarter of 6 to 9. And again, if you're looking for the deviation that we talk, breaker range, 50%, fail to close below, we're going back to the range high, breaker range, now moves towards the 50%, like this, boom. And if you need to close above this one to test this high, if close above this high, test the 50% again. Close above the next high. And if you look, if you take a look on the regular trading hours chart, we are on the, we tested 50%, sorry, the lower quadrant of this range, and now we closing above this new weekly opening gap. So we test the new weekly opening gap below, fail to close inside, but on the retrace, never close below again on the lower quadrant. This candle trade almost to the new opening gap high, but the next one, lower quadrant, and now start trading above 50%, upper quadrant, need to close above to this level and start trading inside this new weekly opening gap here. And if closing above, again, the same logic, lower quadrant, 50%, upper quadrant, we're gonna test this range from this one and this other one here. But right now, price is rejecting on the 50% of this range from upper quadrant and the high. That was the 50%, and now it's the upper quadrant. We need to close above this level. And here, price never, even on the 1 minute, never closed below the upper quadrant of the range from 6 to 9. Fail on the upper quadrant, and now closing above the range high, we need to see the 0.11 again. If closing above 0.29, and then the gray box up here. And on the regular trading hours, we almost touched the 30 gray box, didn't get there. So failing to move in here, we expect price to back at least to the range low. And if closing above the range low, we pay attention to 11% and later the lower quadrant. But right now, didn't get there yet. Was struggling on the 11% below the low. Thanks, Alex. Have a great Friday and a great weekend, you too. See you next week. Thanks, brother. So here what we can see, here we can see the price just swept to the 10 to 10.15 high and fail. But on this retrace, it's holding above the 50%. So for me, looks like still bullish, because usually when we sweep the range high or low like this and fail, we expect price moving to the other side. But in this case, we retrace back to 50% and hold it above. On the 1 minute, we can see better. And if we start failing to close above these levels, we most likely see prices moving to the range low, because you have this rejection here, and the bodies never close above 88.6. So 50%, get back to trade, try to move higher, fail to take the previous high, fail to close above 0.786, and now we need to pay attention if this candle is going to close below 50%. If so, we're going to move into the range low. If fail, it's just a retracement to keep pushing higher. And if we use the reverse Fibonacci levels, this should be close to 618. Yeah, almost the 618. And again, the level that's very important of the 629, the 886 level. You get really close to this level, reject, and now price is struggling to closing above the range high. So yeah, we need to wait. It's a consolidation. Like I said, for me, price should trade to -4 deviation, but sometimes because it's Friday, the price will feature this movie on the Sunday night. But I'll hold this trade like this. Stop is above break even and let my last target on the high. Actually, what I do, I'll put inside the blue box that will be here, yeah, on the half deviation, this level here, below the half deviation. Actually, on the closing range low. That's it. So what I'm gonna do, if I was measuring my trade, I'll trade my stop at 2 below this low, because that was the swing high and we reject on the half deviation. Now price sweated the previous high, so invalidate this one, and that would be the manipulation. So right now, price failed to close above -1. So we just see a lot of wicks, bodies holding above, but just in case, for me, if the price were moving higher from here, we're not supposed to trade below this low. So just in case you have a bigger profit, my stop loss will be here. If you stop me out, fine, there's some profit. If not, the last target is up there. Because again, prices fail 1, 2, 3, 4 times to close inside or above the 4 and 4.5 deviation from the range to 9 to 915. So for me, that's not looking good to see prices moving higher right away. And also on the 6 to 9 AM range, price never closed above the 0.11, was the same signature on the downside. We reject here, and again price is back into the range. The 86 was working as a support for the price, but this candle failed on the lower quadrant But since after this retrace here of this big candle, we never close above the range high. For me, shows some weakness to moving higher. So, I mean, thinking about managing the profits makes sense for me moving this stop here, and then see what happened. And the 86 level again works as a support, touch this level and fail to moving lower, but now fail again on the range high. So it's a consolidation since 9:54. It's like half an hour, 32 minutes. And let's see if by 10:30 we should break the consolidation on the upside or the downside. So have 4 minutes to break the range above or below. Yeah, break it before. This can already break the consolidation high. So it looks like then, and that's 4.5 deviation. So we need to see price closing above 4.5 to move it towards to 6 and 6.5 is the 30 gray box. Usually it's the last delivery for this range from 9 to 9:15. That's not usual. Usually it would be 4 and 4.5 for prices right now. But because of this moving on the downside, and then if you're looking for example, the London levels, sorry, not London or the Asia levels, then 9 to 10 p.m. Price trade much further than usually. That's not usual too. The 6 and 6.5 will be very rare days, and price trade even lower. So right now we most likely to see price trading above 4 and 4.5, and moving towards to 6 and 6.5. And if you take a look again to the midnight opening range, now we break the midnight opening range and we pay attention again. Now I'll pay attention to 50% midnight price, and if close above 50%, upper quadrant and the range high. If you fail on the 50%, the lower quadrant. And again, think about managing the trade. I'll trade my stop to this low. And I'll pay attention on the daily levels. If we start closing above the 618 range, if you start closing above this level and move towards to 50%, that'll be 25,054. 81 is my target, so 81 is, yeah, the retracement levels if you close above this fractal 50%. And the 6 deviation that, I mean, if price closes above 4.5, 6 deviation is the level that price is supposed to hit. That's 25.81, and that's where my last target, 81. So and we needed to see the 4.5 usually works a resistance, and now should work as a support. If the price not close inside the 4.5, we most likely see price trade to 6. So we close above, retrace, touch the 4.5 range high. If you hold here, moving towards your 6 deviation. Or maybe can trade inside this level and not closing below this, the 4, and will be this fair value gap here. And also, this will be a 07050786 retrace if you trade inside this level. Thanks, Quick Peeps. Thanks, man. I appreciate it. That was a nice day. I mean, I was confident that was the law of the day. Sorry, I wasn't trading my personal account, that we didn't have the leg to the entry, but that was a nice. Even if this leg was a nice entry, I tried to take it right before the opening range low. When this kid started moving higher, I saw this rejection here. That's supposed to be my entry around this level.